All right, welcome back to Financial Clarity for Doctors. I'm Corey Janoff, joined as always by Rachelle Vanderzanden.
Hello.
And today we want to talk about the stock market. It moves in mysterious ways. It doesn't always do what you think it might. It has no heart or soul or feelings. Um, we've a lot of these podcast topics stem from conversations we have with clients and maybe friends or family members, but a topic that maybe not as much, but it definitely comes up. Where people are maybe somewhat surprised at how well the stock market's doing. I mean, we're recording this in early May. Stock market keeps hitting all-time highs. It's at like S&P's at like 7,300 something at the moment. Who knows where it'll be when you actually listen to it. Listen to this episode. Could be higher, could be lower. But there seems to be a disconnect. There's always seems to be a disconnect between the stock market and the news headlines. It seems like the world's falling apart. Geopolitical instability. There's wars. We got a loose cannon of a president. We got the economy, layoffs, inflation, prices, blah. World's coming to an end. But my investment account keeps getting higher, so I can't complain too much. But it seems like people are waiting for a crash. And yeah, that might be a little poor choice of words. Can't complain too much. But when we're just looking at our own personal financial circumstances, most people are doing better than the world around them seems to be doing. Everyone's waiting for a crash that may or may not come. Like, oh my gosh, with all this negative news, like how can the stock market be so high? Like, how can it keep going up? It's got to crash. It's got to come down. Why does it behave this way? So we'll try to make some sense of it, but to be honest, no one really has good answers for why it's doing what it's doing, what's going to happen in the future. If we knew what would happen in the future, we'd all be trillionaires. Like Rachelle and I would be doing this from our private island. But it's historically speaking, stock market goes up more than it goes down. And as long as there's people on this planet that need to buy things and eat, feed their families, there's opportunities for companies to deliver goods and services and therefore opportunities for companies to make money. And that's what the stock market is. It's companies that are making money. And if you're invested in those companies and they're making money and they're growing their money making abilities,
You might also make some money.
you'll participate in that earnings growth. So maybe overly simplified explanation, but I guess where do we want to start here today?
Yeah, I think there's part of the disconnect is just what are we paying attention to and what are the big like movers and shakers paying attention to, like the people who are actually moving the needle in the stock market. And we pay attention to lots of stuff, obviously, from person to person. It's going to vary. But, the news is one thing. If you pay any attention to the local news, it's almost always bad. There's a burglary, someone got hit by a car. There's graffiti on a house with like dark political overtones, like all sorts of things. My in-laws were
Briefing
here.
over what I wrote, but probably for
I
the
did.
best.
I don't want to, no specifics. But anyway, but like my mother-in-law was in town this past weekend, and we let our 10-year-old walk to the park by herself a half a mile away with her Apple Watch, where I could literally watch where she was walking, and she could text me or call me, and I could text her or call her. And I thought my mother-in-law was going to have a heart attack. And I was like giving her some like reassurance about, she knows how to use the crosswalk. Like there's a little button she can push. And then I realized she was not concerned about that. She was concerned that Colette was going to get snatched on the half mile walk to the park in the middle of the day. And I was like, "Oh, Sherry, like
It's a
yes,
shared concern. A lot of people have that
I
concern
know it is.
because
It
the
is a shared
news.
concern." Yes. And I totally get it, but I was like, "Oh, girl, she's gonna be okay." You know? Like, and she was, and she came walking around the corner, and she literally like clutched her heart when she saw her like walk around the corner and was like, "Thank God she's back." Like 10 minutes later, like she literally walked there and straight back.
Was Nick
But
not allowed to play outside when he was a kid without? I mean, we
no, we
didn't
were
have.
talking
Yeah,
about that
that's
too.
the thing.
They
Like
lived
when we
out
were
in the
kids.
boonies
Yeah.
and he was riding his bike down the highway at
Yeah.
10. Like so much worse that she's like, it's different times. And I'm like, It's not that different, my
Yeah.
friend.
It's
It's not that different.
it's probably safer now than it
Yeah.
was then. We just
Yes.
anytime there's a kidnapping or anything, like
Yes.
you hear about it. It's
Yep.
like, the whole shark attack hit by lightning, like it's going to make the
Yep.
news because it rarely happens. So
Yeah.
like the 13 people a year that get bit by a shark, they're going to be on the news.
For
Um,
sure.
but yeah,
Yeah. I also think like where we live in this burby little kind of well-to-do neighborhood is probably much safer than where they lived, which was just more rural. Like there's no one to witness someone grabbing that kid because there's
for
no one
sure.
around,
Not at a busy
when Nick was
crosswalk.
little and yeah. So anyway, I was like, she's okay. Don't worry too much. Anyway, but it makes sense. We get concerned because of things that we see on the news and stuff like that, which is just more of a general observation. And then there's other things that we expect to affect our finances more, like conflict in the Middle East, which is on and off again all the time, but on
For
again
the
at the
last
moment.
5,000 plus years.
Exactly. Yeah, there's domestic political tensions, including like political violence and contentious elections and things like that that feel very scary and like they could have an effect on financial things too. There's repeated stories about the cost of housing going up and up and up and how it's just so much less affordable than it used to be. Gas prices have skyrocketed very recently, up 50%. But on an inflation adjusted basis, we're earning a little bit more. They're like the same price as 2004, but that's not our frame of reference. We're not looking at like what was my paycheck compared to what it was in 2004 and how do gas prices compare to 2004? Like we're not making those kinds of connections. Then, you see the big talking heads on the news sometimes, and we pay attention to those. We watch those sometimes. And when I say we, I guess it's not true as a for every single person, but just generally speaking, like some of these things catch our collective attention. Ray Dalio is one of the main guys that you kind of think of as like the doom and gloom friend. And I was recently like reading and kind of looking over a podcast that he did with one of the New York Times collaborators. And the title was literally like a legendary investor on how to prevent America's coming heart attack. Like we establish like that this guy knows his stuff and then we talk about his perception of the country and how it's just going to fall apart, and that's just in a headline. You don't even have to read that article to understand that Ray Dalio knows his stuff and he thinks we're in a rough spot. Like just literally reading the headline and that's what's happening there.
Smart
But
guy, made a lot of money in business,
for sure.
must know what he's talking about.
Exactly. Yeah, exactly. And then when you get into it, it's like, okay, it's a 50-minute podcast episode. So it's long. I didn't listen to the whole thing, but I read through the little notes and things. And it's really talking about like political science and macroeconomics and like the rise and fall of empires, which are these really, really broad topics that may or may not affect our finances in the moment, right? So, he talks about lots of things like the collapse of the dollar and like how you should hold gold. And he jumps through a bunch of different things and uses that to infer that these things mean we're on the brink of an economic collapse or, massive stagflation where, inflation's anyway, like all sorts of doom and gloom stuff. But he's smarter than us, period. Period. He is smarter than Corey and I. I don't know how you feel about me saying that, Corey, but I
I
think he
agree.
is.
Well,
Yes.
I would assume he is. He has a great understanding of world
Yeah.
economics. He's run one of the most successful hedge funds in the history of hedge funds, made billions, if not trillions of dollars for him and his clients.
Mm-hmm.
Um,
Mm-hmm.
he's written a great book called Principles. Like if you want to learn how to run a company, like that's, a decent little starting point. So,
Yep.
but predicting the future is hard, as the great
Yeah.
Yogi Berra once said.
Yeah. Smart people are very frequently wrong about the stock market. Like it's not an easy thing to get right, even if you're a freaking genius, right? Yeah. You talk about Ray Dalio's history of being right and wrong.
Yeah. I mean, you could go back with a fine tooth comb and find all the things he's been wrong about, but some of the ones that stand
Well,
out the most, like is
yeah.
in the early 1980s, he was predicting one of the greatest depressions was on the horizon. We were coming off of a high inflation period of the 70s. American economy is broken, yada, yada, yada. And then what happened next? One of the greatest economic booms and stock market, bull market runs in modern history. He's also ever since the lost decade of the early 2000s, he's been pounding the table about watch out, it's coming again. We're going to have another big recession, just like the 1930s. And he's been on that horse for the last 15 plus years, yet it's hasn't come to fruition. If anything, the economy is stronger than ever. Um, He's been talking about lately the debt crisis, where we have this impending debt crisis. And like crisis may be the wrong word here. It's not he's not wrong that the US has a lot of debt. We've got one of the highest
Hmm.
debt loads in history for America. But yeah, there's a global demand for US treasuries. It's the safest, viewed as the safest place for your money in the world. The safest financial instrument to park your money. You actually get some interest from it. There's some countries like, Japan just started raising interest rates, but for a long time they were essentially paying zero interest on their government debt. Um, and so you're getting some interest. It's safe. You don't have to really worry about inflation or political instability. Take that with a grain of salt. Some people might say it's highly politically unstable in America right now, but compared to other countries, we're relatively stable. Um, and so as long as there's a demand for it, there's going to be a debt carry load. Now we can, go back and forth on if that's good or bad, or how do we service the debt, yada, yada, yada. Do we raise tax dollars? Do we cut spending? Not here to talk about that today, but um, I am of the opinion, maybe Rachelle is as well, and I think a lot of people, it's not as bad as the Ray Dalios of the world are making it sound. Sure, we got some issues in this country, absolutely. We're gonna need to figure out how to address them. But I don't think we have this looming debt crisis where it's going to be this economic collapse and the dollar is going to be worthless. And because what's the next best alternative? Like, if we're not going to use dollars as the global currency, like, tell me what's next in line. Where are people going to go? What are we going to start using?
Crypto.
No, not
Lots of
happening.
people think so. I don't know anything. Like, I'm not the person to talk about cryptocurrency because I
Yeah,
know nothing about
some
it.
some
We'd probably get
bros
in
in the
trouble for it.
manosphere think so, but I don't think most central banks are going to start using
Right.
crypto as
Well, and
their.
Ray Dalio wants everyone to hold gold. It's like, okay, how much gold
We
even is there in the
broke away
world, my
from
friend?
gold
Like,
a long time
not,
ago. We're not going back to the gold standard.
yeah,
Sorry.
yeah,
So
yeah.
like
He
yeah,
also makes the argument,
democracy is the worst
yeah.
way to run a government except for all the others. Like what what's the next best option? Present it to me and I will listen if we're not using
Hmm.
the dollar anymore.
Yeah. I think part of what he was talking about in that most recent podcast episode was also just like, like the US kind of dominance in the global system is declining and will continue to decline. And I think he's right about that. Like, the British Empire wasn't the British Empire forever. Like it just like no one country is going to be the leader of like the global economy forever. But it doesn't necessarily mean that transition that these companies no longer offer value. And I think that's like what we're kind of going to get to is that, yes, there may be some sort of transitional period that's happening, which will take a long time to happen. It's not going to happen overnight. But when we think about why is the stock market going up and up and up and up, still, it's partially because not everyone is just paying attention to the headlines. Lots of people are looking at the numbers. Like, the movers and shakers, the people that really move the stock market, that really determine, like, are we going up and are we going down, are the people that are making big purchases, like investment makers and pensions and mutual fund managers, all of those kinds of folks that are really moving the needle on pricing. They're not necessarily paying to these longer term things. I'm sure they're paying some attention to them, but that's not affecting their decision to buy or sell right the second as much as the current economic circumstances.
Yeah, I would also surmise that 401k participation, I forget when it
Mm-hmm.
was, but auto enrollment in 401ks is now mandatory. I think it's like 2/3 of US adults own stocks. And if you are at a company that has a 401k and you're putting a percentage of your paycheck into that 401k, regardless of what's happening in the stock market, you're buying. And
Yeah.
that increases the demand for stocks. So just that blind purchasing of index funds, it's
Hmm.
not the lion's share of the stock market, but quick Google search, it looks like estimated about 10 to 15% of total US publicly traded companies are held inside 401ks. That's not an insignificant amount. So you've
Not
got
at all.
a 10 to
Yeah.
15% floor just from everyone in America buying stocks every single paycheck with their deposits. Um, so
Yeah.
that's helping prop things up. I'd also,
It
going
used to
back,
also be that that money wasn't automatically invested. So even if you were automatically
correct.
putting money in your 401k, maybe it would sit in cash until you decided to buy something. But now, like all the money that you deposit into those accounts automatically goes into some sort of target date retirement fund most of the time, which is mostly indexed stocks and bonds, depending on your age and depending on how close you are to retirement. So, yeah,
Yeah,
auto
back
saving, auto investing.
and to the point about, is the US going to be the global superpower, or are they losing their grip? Back to the currency, like who's gonna take the reins? Who's gonna usurp us from our global dominance? Like the U.S. economy is still number one by leaps and bounds. Like the stock market represents like 60 to 65% of the global stock market. This is still where all the biggest, baddest companies are domiciled. So it's not happening overnight. I can tell you that. Sure, the Roman Empire fell, the Babylonian Empire fell, the British Empire fell, the US Empire eventually will probably fall too. But I don't know. It's not happening this year or this decade. Like it's going to take a while for that to happen, in my personal opinion.
I think like
Um,
political, I haven't studied this in a long time, but it's always like China is what people talk about. Not necessarily in terms of currency, like what's going to become like the base currency and but like which company will overtake the US in economic output and GDP. And so it's always China. And most of the estimates that I used to see when I looked at political science way back in the day was like 2050. I don't know if that's changed. But like there's trends. They can kind of project forward, like what does this look like? How quickly is this economy growing? How quickly is this economy growing? And when are they going to kind of reach parity? And that was very frequently what you would see.
and I mean, some of it's a numbers game. Like what, there's 250 million people in the US versus 1.4 billion in China. So, I
Yeah.
mean,
Oh,
sure,
absolutely.
eventually from a gross output standpoint, they should
Yeah.
have a greater economic production just based on their
Yeah.
numbers and
Well,
headcount. But on a per capita basis, like they got a long ways to go.
Well, and that's part of the reason that like Europe kind of declined in the global economic picture is because their population stagnated in a lot of Europe, in like developed Europe. So yeah, that makes sense. Like a lot of this is just kind of demographics more than anything else. Ooh,
Yeah,
now we're really getting into it. Super
I
fun.
know. We're getting sidetracked per usual. So why does the stock market keep going up despite the
Yeah, that
US
was what we
losing
were
its
trying to talk about.
power, the debt crisis, the China taking over, um, inflation, gas prices, etc. But the bottom line, companies are making money. And especially companies in America, they are really effing good at making money. And that is all the stock market cares about. The stock market is a heartless, soulless, emotionless
But
beast.
not true because sometimes emotion totally drive returns like COVID and everyone's like, "Oh no."
No, I would
Like
I would disagree. I would say that was a resetting of expectations based on the economic conditions. When the global world shut down, it's like, well, shoot, how are these companies going to make money? That's going to change our forecast. It wasn't like people freaking out. And now, sure, the stock market is comprised of the collective humanity. It's people.
yeah.
So and
Yeah.
and people can be emotional, absolutely. But when
Yeah.
you aggregate the masses, generally speaking, they get it right more often than not, and more often than you or I could get it right. Just the
Hmm.
collective. That's why I think these betting markets, like Kalshi, Polymarket, sure, they have some issues. They need to clean up the insider trading, etc. But the collective power of crowds to be able to predict what's going to happen, I think is a lot more accurate than one or two economists trying to
For
predict what they
sure.
think is going to happen.
Hmm.
Just the resources of it. So the great thing about public markets, they factor in information almost instantaneously. It gets input into the price. So anytime there's an earnings report, a headline, whatever, it's very quickly absorbed into the price, and that price is reflective of an expectation of the company's future earnings. And at the end of the day, the number one objectives of companies, particularly publicly traded companies, is to increase shareholder value. So one of my very first finance lessons in college, I still remember the professor, number one objective of a business, of a company, is to increase shareholder value. Now, on the surface, that might sound a little scummy. Like, well, what about like doing good for its customers and loyalty and yada yada yada? So, well, increasing shareholder value, like it's a long-term game. Sure, a company could try and make a quick buck and alienate all its customers, and then they're going to go find a competitor that's maybe not as ruthless. Um, but over the long run, the company's got to find that balance. How do we maximize our revenue and profits while still retaining those customers, increasing our customer base so we can grow and continue to grow our revenues and profits? So it's a delicate balance between keeping people happy, um, and squeezing as much money as you can out of things. You look at like Amazon and Walmart's model, they're not trying to make as much money as they can from each and every purchaser. What they're trying to do, though, is appease the masses by delivering goods and services faster and less expensively than their competitors. And they're really good at that. And that's why Amazon and Walmart are the two e-commerce giants. Um, I don't think that'll ever, well, I don't think the demand for inexpensive goods quickly is ever going to change. It's something that Jeff Bezos, when he was the CEO, said, like, you know, people are always trying to figure out what's next, what where are the trends moving, what are people going to want, and I try to figure out what's going to be the same a decade from now, what's not going to change. And inexpensive goods delivered fast, people are always going to want that. And they've done a really good job of capitalizing on that. Depending on what city you live in, like you can get an Amazon order in an hour, um, and it's reasonably priced. So often cheaper than going to the store and buying it. So,
Hmm.
anyways, companies are making money, and they're making a lot of it right now. Like this latest earnings season, the Q1 2026 reports. 63% of companies as of early May have reported. 84% of those are beating their earnings estimates. So analysts of all the investment banks say, here's what we think Amazon's going to make. Here's what we think Pepsi is going to make. Here's what we think Nike's going to make. And two-thirds of the companies are beating those, or no, over 80% of the companies are beating those estimates. That's a good thing. Stock market loves it. Companies are making more money than analysts expected them to make. And especially these large tech companies like Alphabet, Google, their revenue was up 22%. Their profit rose 81%. Meta, 33% year over year increase. Amazon net sales increased 17%. Microsoft revenue up 18% year over year. Like these are insane growth numbers for companies of this size. We're talking about multi-trillion dollar companies growing at 20%. I mean, that's nuts. Like absolutely nuts. So the fact that they're able to do this is mind-boggling. Now, these companies aren't just one company. Like they have hands in so many different
Yep.
areas. Like they own a bunch of subsidiaries. So it's not like they just have one line of revenue. But still, like being able to compound at those rates is absolutely insane. And then there's even big name private companies that are making a lot of headlines. Now, private companies take with a grain of salt because they don't have to report publicly their information, but there's enough people around and in the know, and they are releasing some of their information because they're trying to tee it up for an IPO later this year. But like Anthropic, OpenAI, SpaceX, they're all expected to IPO at close to $1 trillion. And the growth numbers are nuts. I think Anthropic's revenue increased 80-fold over the last year. Like they're on pace to be one of the highest revenue generating companies out there, and they've only been around for a handful of years. So it's hard to comprehend the pace at which these companies are growing. Now they're also spending a lot on
Hmm.
these data centers and trying to increase that growth trajectory. Is that going to come back to bite them? Who knows? Um, but all that spending is also creating jobs and and filtering into the economy. So I don't know. Companies are making money, they're spending money, which means more people have money in their pockets to spend money, and these companies then make more money, and it's a constant loop of money making activity. And short answer, long-winded short answer of that's why the stock market keeps going up.
Yeah, and obviously any of that can change from quarter to quarter and different things like affect the economy and affect revenue and profit and all that kind of stuff. So this is not saying that this is going to be what it is for the foreseeable future. It is what it is right now. And obviously we expect stock market fluctuations, like things will go down at some point. Like Ray Dalio is not wrong about there being a recession at some point. Like it's going to happen eventually. And then he'll be like, see, I was right. But yeah, we we kind of expect over the long term to see some bumps in the roads. But realistically, like what do you do? Like you have to ignore the noise as much as possible. Know that like when you developed your own personal strategy, it wasn't really based on current economic conditions. It was based on like what's my long-term strategy between here and retirement. Like for most people, that's what you're investing for. Like that's the purpose. And if you have a long time to be invested, even with those bumps in the roads, you still have a very good chance of being successful and the best chance of being successful just by being invested and not sitting on the sidelines. It's also like that's why we build diversified portfolios. You know, like if there's some concern about the US economic outlook, well, hopefully you have some international exposure in your portfolio as well. So like when the US stock market goes down, like there's some diversification there. But ultimately, like you can't control any of this. Kind of have to focus on what you can control, which is what we always say. I know we sound like broken records, but that's the truth. Like you can't control any of this. So focus on what you can control, which is how much you're saving, how much you're spending, you know, to a certain extent, like when you want to retire. Like earlier is going to be a little more challenging. If you work a little bit longer, then, you know, you're going to have more time to save. But this stuff, we can't control any of it. We can try to be informed, but we can't control it.
Yeah. Focus on what matters that you can control. So, like, the weather matters, but I can't control the weather. But I can control if I bring an umbrella or a rain jacket if it looks like it might rain. So focus on that stuff. Uh, and, keep it simple. Get back to the fundamentals, like Rochelle said. How much you save, keep your spending in check, and as long as you just keep saving a portion of your income over a long period of time. I mean, for many of you, your investing time horizon is like 60 years. It's not only getting to retirement, it's also getting through retirement. So there's going to be plenty of negative headlines because the negative headlines sell. And when there's any conflict, the more negativity, the better it is for news networks because then they get more eyeballs, which means they can charge more to advertisers and make more money. Again, number one objective of companies, maximize shareholder value. So news companies are companies. They're trying to make money. And how do they maximize that? Get more eyeballs. And what sells? Negativity. If it was all
Yep.
happy, people wouldn't be.
Sensationalism.
Yeah, exactly. That's why Ray Dalio is on podcasts and talk shows and everything. CNBC, you name it, because hey, people are going to pay attention. Smart guy with warning signs flashing. Let's tune into this one. So and so who predicted the 2008 financial crisis. He's coming on the show. Oh, let's tune in. He predicted the 2008 financial crisis. He also predicted the 2011 financial crisis and the 2015 financial crisis and the 2018 financial crisis and the 2022 financial crisis, none of which came to fruition, but we'll just gloss over that part. Um, he was right about 2008. So it's like, Vanilla Ice had one hit. He's still touring and making money. Um, you just need one. All it takes is one hit, and you can live off of that forever. So,
Yeah. In some cases, literally, because you made a
yeah,
lot of money.
I mean, Vanilla Ice probably not the best one. But
Yeah.
like, who's the gal, Darlene Love, who does the Christmas song and was on Letterman every year?
I don't know.
you know, there's plenty of artists and bands that they had one hit song, and that's as long
That's
as they
all
had
they
a good
needed.
contract in
Yep.
place and they can live off of the residual revenue from it. Weren't fleeced by a manager that stole the rights. But anyways.
Yep.
Well, thanks for listening as always. We'll see you next time.
Bye.